What types of time frames are there? On what time frames can a beginner make money? Will choosing a time frame really make your trading easier once and for all? Hello everyone, my name is Victoria and I'm glad to see you on my YouTube channel. Today we will discuss the types of time frames for binary options and the importance of their choice for traders. Watch closely, listen sharply, and let's get down to business. Beginner traders often ask themselves what time frame is best for trading. Why is it difficult to give a clear answer to this question? Well, a lot depends on individual preferences. But in order for you to have a general idea of this, I will differentiate trading styles by the time an open position is held. Short-term trading, medium-term trading, and long-term trading. Short-term trading. Traders who prefer this style of trading use a time frame ranging from 1 minute to several hours. Typically, trades are opened during the day and positions are not carried over for the next day, even though some traders are able to work for several hours. For example, if the market is quiet and a significant movement is expected. Short-term trading also includes scalpers. Those are the traders who can hold trades for a minute. They mainly use the minute time frame because they need to make quick decisions. In general, short-term trading is often preferred by beginner traders who believe that it is easier than medium or long-term trading and brings bigger profits. And it is true from some perspective. In a perfect world, the more transactions you open, the bigger the profit you get. However, in practice, this approach simply does not work. Most of the lost deposits for beginners is caused precisely by the fact that they choose the wrong binary options strategy in terms of trading time. In fact, short-term trading is very dangerous for beginners. The 1 minute time frame in trading is not a beginner's friend due to the fact that there is a lot of market noise and it is quite difficult to determine the real trend. There can be absolutely any strategy for the hourly time frame. The main thing is that it allows you to close a deal within 24 hours. Medium-term trading. When choosing a time frame, it is also important to know a couple of things about medium-term trading. It lasts from several weeks to several months. This is the time when deals are held. For most beginners, this approach seems pretty much unrealistic. Sometimes you are out of patience by the end of the week. How can anyone wait for months? These types of traders choose a time frame from several hours to a day. Strategies for daily time frames are numerous, and therefore you can always find a way to make a profit. So what are the advantages of this trading style? First of all, you have the opportunity to use fundamental analysis. In the short term, it simply does not work. Basically, it does not make a difference. Second of all, medium-term trading is more hasteless and steady. Positions are opened less frequently than with short-term trading. So if you are interested in finding the best time frame for a beginner, I assure you daily charts are much better option than minute charts. Opponents of medium-term trading usually claim that this is practically impossible to earn much on it. After all, the deal is held for a long time, and you can open lots and lots of positions in short-term trading instead. But on the other hand, a trader values profit in the long run. Many people find it easier to make money on a few deals a year rather than to balance between profit and loss levels by opening a large numbers of deals. This happens pretty often. When a trader sums up the year, it turns out that many short-term deals resulted in really nothing, and its profit balance is around zero. Therefore, trading on daily time frames often turns out to be more promising. Long-term trading. A weekly or even monthly time frame in trading is used to open long-term positions. Deals are held for months and sometimes even years. To many of you, this approach might seem too far-fetched, but in fact, this is how many investments and hedge funds work. And so the question is, which time frame is better for a beginner to trade on? It is almost impossible to give a definite answer, but I'm pretty sure we can begin by excluding the minute ones. Why so? Well, the main reason for this is so-called market noise. It is actually quite difficult to forecast on short time frames. Most of the work here is done with funds and risk management. Scalpers who work on short time frames should very clearly determine risk and potential profit. Despite even having trading system used to enter deals, the market is still unpredictable and trading requires precise planning. What time frame is the best for a beginner to trade on? We recommend beginning with a daily or hourly schedule. Here the fluctuations are more stable and the market situation is better readable. By the way, in my Telegram channel, I publish deals every day so that you can find them for yourself and try to make money. Link to my Telegram channel is in the description below. So now let's practice on a few deals. We're going to have a look at different time frames. Obviously, in this video, we will not be able to analyze long-term time frames, only short time frames. There's simply no way for us to practice long-term time frames in this particular video. So let's look at scalper deals as an example. Let's take deals for 1 minute and open it on dollar Brazilian real currency pair. Let's go. Excellent, the deal brings us profit. Let's change the time to 2 minutes and work with the next currency pair, which will be Yemeni real and American dollar. Sell deal for 2 minutes. Great. The deal brings profit. You and I both have seen how at the very last seconds the chart went down. Literally the last 5 seconds. Actually, this was a very risky situation, a very risky deal in general. The graph potentially could have gone completely in the opposite direction and we would have lost our deposit. Phew. So let's continue. Let's look at the next currency pair. This one is dollar Philippine peso currency pair. I open a deal for 3 minutes. In this case, we trade using the RSI indicator. We see that the indicator crosses line 30 from bottom to top. There are signals of an uptrend, so let's see how this works out. Excellent deal, brings us a profit of $92, and we continue. I increased the deal time to 4 minutes, and this is the perfect opportunity to change the time frame. It stood for 5 minutes, so let's try to reduce it at the same time. Let us return to the deal time of 2 minutes, but set the time frame to let's say 1 minute, and we will see how our deal works out. So the next currency pair, dollar Indonesian rupee, and a sell deal. Well, as you can see, the deal has gone negative. We have set the time frame to 1 minute instead of 5 minutes. We can see that predictability has begun to deteriorate, so let's now set the deal time to 3 minutes and time frame to 3 minutes as well and see what changes. The next currency pair is Bahraini dinar, Chinese yuan, a buy deal. Excellent. Another profitable deal. So you have seen how we traded today on different time frames, 5 minute, 3 minute, and we received different results, also depending on the time frame of a deal. 1 minute, 2 minute, 3 minute, 4 minute deals. In today's video, we looked at the types of time frames, which ones are less risky for traders and which ones are the most profitable. Have you chosen the best time frame for you? Share in the comment below. I hope you learned something useful today. Like this video and I'll see you in the next one. Bye!